Hello everyone, I am Reena Anjali. My presentation topic is Term Lending Institutions and Commercial Banks. First, let us know about what is term lending or term loan. A term loan is a loan from a bank for a specific amount that has a specified repayment of schedule and either a fixed or floating interest rate. In other words, a term loan is a repayment of money over a period of time and a specific rate of interest. Most of the term loan last from 1 year to 10 years, but may last long as 30 years in some cases. A term loan usually involves an unfixed interest rate that will add additional balance to be repaid. Overall, term loan can be defined as is a type of advance that comes with a fixed duration for repayment. A borrower can opt for a fixed or floating rate of interest for repayment of the advance. There are many term lending institutions are there. In that, some of the term lending institutions are state financial corporations, that is SFC, state industrial development corporations, SIDC, Industrial Credit and Investment Corporation of India (ICICI), the Industrial Development Bank of India (IDBI), Unit Trust of India (UTI), Small Industry Development Bank of India (SIDBI), Life Insurance Corporation of India (LICI). In that first one, State Finance Corporation. State Finance Corporation came to be organized in individual states after the enabling Central Act. This effect came into force in August 1951. The basic objective of State Financial Corporation is promoting and developing small scale and medium scale industries in the state with a special focus on spreading industrial culture in the rural, semi urban, and backward areas of the state. They are the state level financial institutions which play a major role in the growth of small and medium enterprises in the concerned states. They offer financial assistance in the form of direct subscription of debentures, equity, and term loans. They also started offering assistance to newer types of business activities like tissue culture, floriculture, marketing, and commercial complex. Next one, State Industrial Development Corporation. The State Industrial Development Corporation came on the scene much after the state financial corporations. It has been set up by the state government as companies wholly owned by them. They are set up under the Companies Act 1956. The main objective of establishing State Industrial Development Corporation was to increase the process of industrialization in India. They undertake the development of industrial area, construction of sheds, and provision of infrastructural facility. These corporations provide loans and advances to the industrial unit in the medium and large sectors. Also, it is considered as one of a financial institution to be established in India. Currently, there are 28 state industrial development corporations that are present in India. Next one, Industrial Credit and Investment Corporation of India. The creation of Industrial Credit and Investment Corporation of India is another milestone in the growth of the Indian capital market. It was incorporated in the year 1955 as a company registered under the Companies Act. The ICICI was incorporated to finance small scale and medium industries in the private sector. The main objective of ICICI is assist in the formation, expansion and modernization of industrial units in the private sector. They provide finance in the form of long-term and medium-term loans or equity participation. Also, it provides technical, managerial, and administrative assistance to industrial concerns. In March 2002, the ICICI was merged with the ICICI Bank and created our first universal bank in India. Next one, Industrial Development Bank of India (IDBI). Industrial Development Bank of India, that is IDBI, established under Industrial Development Bank of India Act 1964. It is the principal financial institution for providing credit and other facilities for developing industries and assisting development institutions. IDBI is the 10th largest bank in the world in terms of development. They provide financial assistance to industrial enterprise and promote institutions to engage in industrial development. Next one, Unit Trust of India. Unit Trust of India, that is UTI, is a statutory public sector investment institution which was set up in February 1964 under the Unit Trust of India Act 1963. UTI began operations in July 1964. It provides opportunity for small savers to invest in areas where their risk is diversified. The unit holders, if necessary, can sell their units to UTI at the prices determined by the UTI. One of the attractions is that the investment in UTI has an income tax rebate and the income from the UTI is exempted from income tax subject to certain limits. The primary objective of the UTI is to encourage and pool the savings of the middle and low income groups and enable them to share the benefits and prosperity of the industrial development in the country. Also to give investors to an opportunity to share the benefits and fruits of industrialization in the country and provide liquidity to units. Next one, Small Industries Development Bank of India SIDBI. It was established as a wholly owned subsidiary of IDBI under a Special Act of the Parliament 1988 and started its operations on April 2, 1990. Presently, SIDBI acts as the principal financial institution for the promotion, financing and development of the micro, small and medium enterprise and also coordinates the functions of the institutions engaged in similar activities. They promote marketing of products of small scale sector. They upgrade technology and also undertaking modernization of small scale units. They provide more financial assistance to small scale and tiny sector and encourage employment oriented industries. Next one, Life Insurance Corporation of India LICI or LIC. LIC or LICI of India was created on 1st September 1956 when the Government of India passed the Life Insurance of India Act. The company was established with the merger of over 245 insurance companies and provident societies. It's a leading life insurance company in India. The primary objective of LIC of India is to spread the importance of life insurance widely in the rural areas and people belonging to socially economically backward classes. The main function of LIC is to collect the savings of the people through a life insurance policy and to invest that money in various financial markets and also invest fund into government securities so as to protect the capital of the people who have given their money to LIC. Commercial bank. A commercial bank is a financial institution which performs the functions of accepting deposits from the general public and giving loans for investment with the aim of earning profit. In fact, commercial banks, as their name suggests, profit seeking institutions. That is, they do banking business to earn profit. They generally finance trade and commerce with short term loans. They charge high rate of interest from the borrowers but pay much less rate of interest to their depositors, with the result that the difference between the two rates of interest becomes the main source of profit of the banks. Most of the Indian joint stock banks are commercial commercial banks such as Punjab National Bank, Allahabad Bank, Canara Bank, Andhra Bank, Bank of Baroda, etc. The, the commercial banks can be further divided into three categories: private sector bank, public sector bank, foreign banks. Private sector banks means a bank where the majority stakes are owned by a private organization or an individual or a group of people. Examples for private sector banks are Catholic Syrian Bank, City Union Bank, Federal Bank, Lakshmi Vilas Bank. Next one, public sector banks. Public sector banks means a bank where the majority stakes are owned by the government or the central bank of the country. Examples for public sector banks are State Bank of India, Indian Overseas Bank, Canara Bank, UCO Bank, ADBI Bank Limited. Next one, foreign banks. Foreign banks mean the banks with their headquarters in foreign countries and branches in our country fall under this type of bank. Examples for foreign banks are Australia and New Zealand Banking Group Limited, AB Bank Limited, Citibank, DBS Bank Limited, etc. Role of commercial bank. The general role of commercial banks is to provide financial services to the general public and business, ensuring economic and social stability and sustainable growth of the economy. The role of commercial banks in economic development are accelerating the rate of capital formation. It means the commercial banks encourage the habit of savings among people and mobilize idle resources for production purpose. Next one, provision of finance and credit. Banks are instruments for developing internal as well as external trade. Next one, innovations. Innovations are an essential for economic development. These innovations are mostly financed by bank credit in the developed countries. Next one, trade development. The commercial banks provide capital, technical assistance, and other facilities to businessmen according to their need, which leads to development in trade. Next one, agricultural development. Commercial banks finance the most important sector of the developing economics, that is agriculture. Short, medium, and long term loans are provided for the purchase of seeds and fertilizer, installation of tube wells, construction of warehouses, purchase of tractor, etc. Next one, development of foreign trade. Commercial banks helps the traders of two different countries to undertake business. Letter of credit is issued by the importers bank to the exporters to ensure the payment. The bank also arranges foreign exchange, which shows about what is commercial bank, functions of commercial, advantages and disadvantages of commercial banks, types of commercial banks. Thank you.